there's potentially going to be a stock market crash of 2025 like no one has ever seen before. So just looking at my trading account right here, I mean, just look at my changes right here. So this is 1 month, $85,000, 3 month, 6 months, year to date, 1 year, 2 year. We've been absolutely pumping lately. And the question that everyone needs to be asking themselves is this disconnected from the fundamentals? Is this rally sustainable? Are we in a bubble or are we going to crash? All that's going to be broken down in this video right here. I'm going to go through exact price targets of companies that I have my eyes on, price targets for the S&P 500 and the NASDAQ. So we're going to start out right here in my alpha report. It's 100% free. Just click the link below and you could get signed up for that. So just to touch super quick down here below on the current state of the economy, and then we're going to go back to SMCI, then we're going to dive into my Discord, we're going to look at price targets. A lot of good stuff for this video right here, so definitely stick around till the end. So we did just get the November jobs data, and this data is very important and is viewed as a really good way to get a feel of the economy. So you can see we added 227,000 jobs versus 214,000 expected. That is good. That shows the economy is a little bit stronger than what's expected because CEOs are adding new jobs. They're adding more positions to be filled. If the economy was going to be weak, maybe the CEOs would say, we're going to cut back. We're not going to hire as many new people. So that data right here would go actually down. So all this data right here, you're going to say, dude, all this data looks pretty good. Like, why are we going to go into recession? I'm going to get into that in just a second because I feel like there are a lot of cracks that are emerging in the economy right now, and it could potentially wipe so many people out. I feel like there's market euphoria right now, and when there's market euphoria, that is when you want to be scared. That's when you potentially want to be selling your positions, because when you have your mother and your brother and your friend at work talking about how stocks are going straight up, how much money they just made on Tesla, how much money they're making on Palantir, when the stock price of these companies is so disconnected from the fundamentals. I mean, I'm not sitting here trying to sound bearish or anything. I'm pretty much like a permabull, but I'm telling you right now, the stock market is not always going to be this easy. And I'm not saying that the stock market's going to crash because we're going into a recession. In my opinion, I feel like the stock market is going to crash because market valuations are high. In 2000s, when we had the dot-com crash, the stock market did not crash because we had a recession. The stock market crashed because anything with a dot-com behind a name, it was pretty much going straight up. I mean, I just shot out a tweet where Amazon went down 95% in the dot-com crash. Yes, of course, it would have been a good buy on the bottom, but if you would have bought Amazon at the top, it would have taken you years and decades to make your money back because you bought at such a high valuation level. I'm not saying we're that high in valuations right now, but some companies are definitely super lofty right now. And then heading over to my Discord, I want to go through a couple things right here just to show you the wild ride that my portfolio has been on this year and to show you why it's totally okay. So if we look at this picture right here, this is showing you the main stages of a stock market bubble. Now keep in mind right here, these stages right here, like the stealth, awareness, mania, and blow-off phase, I'm not saying that the market is a bubble right now, but the market generally follows this same sequence. The market goes in cycles. So in my opinion right now, we're somewhere in the greed category right here. Now to go from greed to the new paradigm top, it's like, I don't know how long that's going to take. Nobody on earth knows how long that's going to take. Maybe the market's going to crash on Monday. Maybe the market's going to crash a week from now, 2 weeks from now, a month from now, a year from now. Nobody knows when the stock market is going to crash. I do promise you that the stock market will eventually go down, and that is when there's opportunity to buy. Everyone in my Discord, everyone that reads my newsletters, you guys know that I feel like the stock market is a little bit overvalued. Maybe the stock market should be somewhere around this category right here, but we're just a little bit overvalued in a greed category right now. So the question is, how much more upside really is there? How much margin of safety do we have on trades that we initiate right now? Yes, I'm making plays, and yes, I'm making a bunch of money on it, and I just showed you my portfolio in the beginning of this video, like I'm making a crap ton of money, but I am cautiously optimistic. Do I think we're going to crash eventually? Yes, 100%. The stock market cannot go up 25% per year for the S&P 500 when earnings growth is only like 10% per year. The market is getting out of hand. It's a little bit overvalued, and I'm just being patient. And that doesn't mean I have cash sitting on the sidelines. I basically have all my money invested into a long-term portfolio. And a lot of people are going to say, well, Brandon, if you think the stock market's overvalued, why don't you sell everything? So let me show you a quick example of why it's the dumbest thing on planet Earth to sell your shares right now if you're a long-term investor. So you guys know I do a bunch of option trades. I make like $30K a month. But this right here is just talking about the money that I have in the stock market like Triple Q or VOO that I plan to hold forever. I have individual stocks, I have options like I just said, but just a simple number right here is going to totally blow your mind. So the current price of Triple Q right now is roughly $520 per share. So if we assume that we're going to invest our money for 30 years and we assume we're going to get 11% per year, of course it's not going to be 11% every year. Some years it's going to go up 50%, some years down 50%. But on average, when you average all that together, 11% per year is what the market's been doing for the last 50 years. So we're going to assume that number right there. So $520, 30 years, 11% per year. The share price, of course it's going to split, but the share price of Triple Q is going to be $14,000 in 30 years from right now. So that is what I'm looking at. I'm looking at the move from 520 to 14,000. I'm not worried about going from 520 and getting it for 400 instead of 520. Like if you go from 520 to 14,000, that's great. But if you go from 400 to 14,000, that's even better. But what if you even buy shares at like 600? Let's just say that you want to buy for $600 for some odd reason. $600, if you're on the road to 14,000, you're still going to make a crap ton of money. You're capturing like 95% of that move. So if you're a long-term investor, don't get so caught up in the market movements and what people say on YouTube, like what I'm saying right now, where maybe we're going to get a stock market crash in 2025. Because honestly, at the end of the day, it's totally irrelevant if you're a long-term investor. Dollar cost average in, buy into the stock market, and you're going to do really well. And then I have this little guide right here that I show people when they ask me, well, how do you invest your money? Like, how do you do it in a nutshell? What do I do? And with me, I like to keep it extremely simple. Increase your income, whether you work a day job, you own a business, whatever you do. Trade time for money. Everybody has to start out trading time for money. I did it. You're probably going to have to do it. Just do whatever you could do to work as much overtime as you can, make yourself more valuable at your day job, and then pile money into the base of your portfolio. So I personally like to do 40% VOO, 40% Triple Q, and 20% individual stocks. That makes up 100% of the base of your portfolio right there. Now, my whole investment philosophy is to just add money to the base of your portfolio as much and as fast as you can. So once you get your base of your portfolio to 20,000 bucks, then I say it's okay to go to the options category right here. So options are only to be used when you have a high margin of safety and when you feel like the stock or the ETF that you're doing it on is trading below intrinsic value. I promise you, when the stock market's going up, you're going to see everybody showing you all the green in their portfolio, all the money that they're making. But when the stock market goes down, so many of those people are going to get totally wiped out. They didn't have a margin of safety. They bought options when they were super expensive. They sold puts when they were expensive. Really, it's just people trying to make money because something is going up in price. They have no clue what the fundamentals are. That is not what I do. I'm an investor. I'm not a speculator. So definitely go through this pamphlet, check it out. And you guys know that I like to sell a lot of put options. But right now, I don't like to sell puts when I feel like the underlying stock or ETF is overvalued. So right now, a lot of things are overvalued in my opinion. So if they're overvalued, I'm not going to be doing options as much. But let's say things were cheap or maybe they're fair value right now. I would probably be selling puts like crazy. And when I'm selling puts, I use those premiums and I add it to the base of my portfolio. And once you start adding these premiums to the base of your portfolio, buying into that base, you're going to be surprised how fast your portfolio will scale, how fast the snowball is going to grow. And you're going to make a crap ton of money. But the rule number one of investing, do not get wiped out. And rule number two, don't forget about rule number one. Do not do anything that could wipe you out. Don't do anything that you could really lose money on. Of course, nothing is 100%, but if you're going to make trades, especially in options, you have to have a very high margin of safety. You have to really understand what you're doing, and you have to have a lot of confidence in a play. You have to do a lot of research on these plays. I know I'm going on a rant right now, but there's so many people on X right now or Instagram or wherever you guys are looking on YouTube that are making so much money, and I'm happy for them. But I promise you, if the market does a 10% dip, these people are going to be totally wiped out and they're going to lose everything. So be careful who you take advice from. I've been building my portfolio for 5 to 6 years. I went from zero to a couple $1 million in 5 to 6 years. Right now I make $30K a month with options. Even when the market's overvalued right now, I'm still generating like $30K a month in options, so it's going pretty good. So I want to blow through Discord super quick, and anyone that's in my premium Discord, you guys know that I share screenshots of my account in real time. So I said, let me share some screenshots of the worst days I've had this year. So you can see in this screenshot right here, I lost 41,000 bucks in a day, bobbing and weaving around as expected, all good, the strikes I have are conservative. Volatility is normal leading into elections. Lost $41,000 that day. Look at this day right here, minus 37,000 bucks. Once again, stay the course. Volatility is okay and normal. guess what? Most people would have panicked and they would have sold on that dip for sure. But what did I do on those days? I bought calls, I sold puts, I bought things when they were undervalued, I added, I had conviction, I made plays that I had a high chance of making profit. Look at this one right here. Look at this double whammy right here. Let me zoom in a little bit so you guys could see it. So one day, so this was 8/22 of 2024. I lost 25,000 bucks in the market that day. Going just to the next day, I made $27,000 the next day. So that is a huge swing in my portfolio right there. And most people probably would have panicked when their portfolio went down right here, but I added. And then look at the next day, up $27,000. So net, I'm up even though this dip happened right here. And as you guys know, just by looking at what my portfolio is at right now, going all the way to the bottom, I'm at 960,000 bucks right now. I just showed you guys that on Schwab, $960,000. So all this volatility through this period right here, I mean, I show this in real time every single day. All the volatility doesn't matter. It's just an opportunity to buy more, use that dip to your advantage. So keep that in mind. So let's go through SMCI super quick, and then I'm going to show you some of my price targets and my favorite trades that we have. And then this video is over. I don't want to take up any more of your time. So SMCI just received an extension from the NASDAQ until February 25th to basically get all of its books together, file everything that it needs to file, because they are under investigation for potential accounting fraud. I think it's going to be blown out of proportion. I could be wrong. You guys know I have call options on this, and I'm up a crap ton of money on it. So going super good. SMCI is up after hours at the time of recording this video. So we're definitely printing money right now. And what do I say to do with this information? It's not out of the woods yet. They do need to get everything in compliance by February 25th. And if they don't, I personally expect the stock to fall like 40-50% in a day. I mean, it's a high risk, high reward play. I don't usually make plays like this, and of course it's a small percent of my portfolio, but it's valued so cheap right now that it's hard to pass up. So a lot of people say, well, dude, I want to buy AMD, it's on a dip right now. And I kind of give this example right here of like, if you want to buy AMD, why do you not want to buy SMCI? So AMD has a trailing 12 months earnings per share of $3, okay? Currently trading at 138 bucks per share. People want to buy the dip on AMD, but SMCI is expected to have $3 earnings per share for 2025, which is the same pretty much of AMD. So AMD, $3 earnings per share, trading at 138 bucks per share. SMCI, $3 earnings per share, and it's trading at 48 bucks per share. So it's kind of interesting that it's roughly the same earnings, but trading for 1/3 of the price, which is what SMCI is trading at. And on top of that, SMCI is growing earnings per share and revenue much faster than AMD. So of course SMCI has the accounting issues, there is big downside risk, but if I just assume the $3 earnings per share and assign a 35 PE ratio to SMCI, which is conservative, if we do 35 times 3, that puts us at $105 per share. You can see right here my intrinsic value calculator spit out 107. If you want to get that calculator, links below for that. And then going down, these are my price targets for the end of year of 2025. So you could go through and look at that. My price targets for the end of year of 2030. So they're definitely a lot higher in there. And these are some of my favorite new trades that I like. I either plan to initiate these or I already have. So definitely look into this stuff right here. And with that being said, check out all my links below for my course, free stock market blueprint, intrinsic value calculator. And if you don't want to do any of that stuff, look at this video right here. It's how I trade stock options. I'll see you guys there.